This is a Momentum Media production.
Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
Hello everyone, Grace Ormsby here. Welcome back to a brand new episode of the Property Showcase brought to you by the Smart Property Investment Network. And as it says in that intro, it is all about making investors better informed. And today's guest needs absolutely no introduction, but I'm going to give him one anyway. Arjun Paliwal, welcome to the show.
Great to be on, Grace. Thanks for having me.
I know it's been a pretty exciting period for InvestorKit, of which you are the founder and head of research. And I should flag, given it is the week that the REB Awards finalists have been announced, big congratulations to you guys for making the Buyers Agency of the Year finalist this year.
Yeah, thank you. I'm super stoked because it definitely isn't just me. Buyers Agency of the Year, coming back to the core word agency, it's a huge team effort. So it's been an unreal year and we're very excited by it.
And it's not the first time you guys have made the finalist announcement, in the REB Awards. It's obviously a highly coveted industry awards program, independent of, the institutes or anything like that. You've also been in for Buyers Agent of the Year a couple of times and Rising Star. So it must really feel like, that journey is just getting bigger and bigger, especially to get, as you said, to be Buyers Agency of the Year.
Well, I think the coolest thing that happens when you reflect on, some of the winnings and the finalists and nominations is that the stories of the clients that you're working with as the years go on get better. And that's, in line with property investing, it gets better too. And so from that perspective, it's pretty cool to be able to, go back to 2018 and go, okay, we helped a first-time investor buy their first place. And then that same first-time investor is a story that we're talking about in 2023 about buying their fourth or fifth place. And so that to me is a huge special part of why we do what we do. And it obviously makes it, from a business perspective, very easy to stand out when you've got hungry, committed clients who want to grow and want to, be ambitious and do well for themselves. And when you pair it up with the right research, the right areas and expertise, it gets to a pretty phenomenal outcome, doesn't it?
For sure. And obviously huge things going on at InvestorKit at the moment. And we've obviously got a whole topic to be talking about today. Before I do get there, how are things in InvestorKit at the moment? What's going on?
Yeah, it's been very exciting. So we've had our team grow from strength to strength. And if we have a look at the last 4 months itself, it's been one of our busiest 4-month stretch ever. And why I think that's important to call out is that we're here in a time where interest rates have risen 10 times and potentially 11 by the time the show comes out. And then from the perspective of sentiment, that's some of its lowest periods. So as a business owner, whether it be buyer's agency, whether it be any other industry, it's always a dream to be able to say the market sentiment or the availability and capacity of the market doesn't dictate one's success. The culture, the team, the clients, the ethics, the outcomes for your clients, the word of mouth, and all of that coming together is what creates that success. And that's definitely what I felt in recent times. And I'm super excited about what that means for us and our clients moving forward.
And speaking of super exciting times, and you brought it up yourself, really, a great segue there. 2023 is a vastly different environment, I think it's fairly safe to say, than what we saw in 2022. And the market is obviously cool. Things are going on, as you mentioned, consecutive rate rises. There's a lot going on that people could be negative about. But one thing I don't think anyone can argue is an absolute positive is the COVID recovery that has been going on for a little while now, but brings us to the return of migration. And that is what we're going to be talking about today. And I'm so ready to pick your brains, Arjun. I hope you're ready. But migration is obviously something that you look at pretty closely as a researcher yourself.
Yeah, migration's an interesting part because one thing that many people forget is that, an area can have so many different types of ways to swing demand. One can be just through less building. One can be from overseas people. One can be from people here moving side to side in different locations, upsizing, downsizing, and so forth. And so, we've deep dive into data that was recently released by the Regional Australian Institute. So shout out to the RAI and their work closely together with CBA to produce the quarterly Regional Movers Index. Now, this is December 2022 data. So the beauty here of this data set, it's not waiting many years like the typical ABS or Census Insights would. And I guess the main thing that stood out firstly was that we did naturally have a big boom to the regions during the pandemic. But even after that calming down a little bit, it still remains above highs of pre-COVID levels. So if we look at, the index from 2018 to March of 2020, that is operating at a lower level to December 21 to December 22, which is that post era from the lockdowns and whatnot. So I guess that was the first key insight that I took out from this research that we shared here. But then the second key insight is that there were a few standout areas. So some of the standout areas when it comes to local government areas in terms of the share of total net internal migration, well, Sunshine Coast, Gold Coast, Geelong, the Fraser Coast region, so your Harvey Bays, and Bundaberg. These were 5 councils that really stood out when it comes to the data and the internal migration share across Australia.
Super, super interesting. Some of that does come across as quite common sense, but obviously there is a lot more to this data than just kind of those headline figures of the fact that there has been this migration shift over the last couple of years. What do you think we can then extrapolate from this to influence buying decisions, really?
Yeah, it's a great question. So when it comes to buying decisions, it's important to firstly take a step back and realize that there are so many intricate parts to what you should analyze when looking at property data. Now, that's something we do regularly at InvestorKit. And when it comes to deep diving into data, we bucket them across demand, confidence, sentiment, as we like to call it, supply trends, and then we take it through a macro lens, a micro lens, and then getting boots on the ground to make sure we can understand what's happening. Now, when it comes to migration, if we have a look at the house price growth for some of these locations that were in the top 5, they were pretty impressive. And I'm talking about house price growth from December 21 to December 22. Why is this important to look at? Well, during the same time, we also had a lot of interest rate rises. And with a lot of interest rate rises, we also had our median house price for Australia move into the red in terms of a national figure. But these 5 locations actually had an improvement in median price ranging from 12% all the way up to 22% when looking at their data for that same time period. So it's clearly, one component to say migration played a positive influence, but I guess the biggest influence that we're noticing across those 5 LGAs were that they were extremely undersupplied, had very fast recovering and strong economies. And this has all come to create a better picture. And I guess that's the key point. Creating a total picture of a city's review, and internal migration just happens to be one healthy part of it.
Okay, cool. So, really, it does go without saying, you're doing research all the time. You're going to be looking across all these things. None of what you're reporting on now, really, especially some of these key winners, which we're going to get to in a second. This isn't in isolation. This isn't you just looked at the migration figures and gone, there's a lot of people moving to these places and there's not a lot of supply. That really long-term sustainability, not there.
Definitely. And this is where you can look at it from the opposite. Where did migration go backwards a lot, but where did price growth still occur? And the Sydney-Brisbane example was a great way to look at it, right? If we have a look at the internal migration in Sydney, internal migration losses in Sydney have been an annual thing, not just a COVID thing. Every single year, there are more internal migrations in the outwards direction from Sydney to other cities than there is to Sydney, right? So to Sydney. Now, from a perspective of what that data shows, though, is that if you compared Sydney's 10-year price growth to Brisbane's 10-year price growth, Sydney still outperformed. Right. And so if Sydney outperformed even while losing so many residents, it comes to a point that it in isolation, internal migration isn't the way that you can say dictates price growth. And this is the same thing when it comes to, regional locations too. Bundaberg has done phenomenally, and Bundaberg is doing well from its migration right now. It's also doing phenomenally from a price growth perspective, right? So I guess it's great. However, over 10 years, there's locations like Armidale who have had very negative migration. And even then, they've still had price performance that's kept up, or if not slightly ahead of Bundaberg's 10-year average. Now, Bundaberg is racing back into that position and pretty much neck on neck with Armadale now, but over that 10-year average, most of the 10-year period, Armadale achieved a better house price result, even though its migration was much worse than Bundaberg's, which shows that this is great data to start the conversation and understand where people are moving, but it's important to get deeper into it and not be making mistakes when looking at this holistically.
What are we then attributing like the net flows of the migration to then? Because you'd think, somewhere like Armadale, where, as you said, prices have been going up, does that then in turn mean that if the population were to increase there again, would price gains be increasing because of that too? Or is it something that needs to be removed and separated from that idea?
Yeah, so population's an interesting story. Now, what I've come to learn is that population has a few flow and impacts. And this is where the old "it depends" gets thrown into the mix.
Sorry, I've definitely complicated all this then, haven't I?
Well, one aspect of population is the fact that as density increases, the dollar per square meter on land can also increase. Therefore, the smaller block of land is improving in its value as larger blocks are more valued when you have zoning occur. So that's one component of population density. Then the other aspect of population is that you have to look at it in relative to how many houses there are for sale, the local economy, and the jobs. And therefore, population in isolation won't be enough. Taking a look at Hobart's many years of slow, sluggish population, whilst the house price growth continued to be very strong, including in many parts of regional Tasmania. That is more a supply response doing the majority of the shifting here. Then you have the third scenario where population growth can actually mean a negative supply issue. So I'll give you an example. For lots of people to move to a given area, it's fair to say that you may need to have many houses in the given area. And that means that there might have been a large pool of construction of houses or a new area of houses start to pop up in the city. And that therefore means excitement for population growth, local economy and spending, but it also means it easily housed a lot of people. And so therefore supply can be higher. So population, and really the core point of today's chat here is to say that do not look at this in isolation. Consider it as part of your overall investing. Internal migration definitely helps, but in terms of relying on it isolated, it will not be the difference maker. And why I wanted to shout out with that is that Queensland has been a phenomenal recipient of all the population love for years and years and years. And we cannot have investors make a simple mistake or a simplified thought of analyzing property markets and just go, hey, this equals great growth and therefore Sunshine Coast must be the best market forever and ever and ever. That is one part of its support, but it's not the main thing that makes it grow, as evidenced by Sydney, as evidenced by Armadale, both locations that have poor internal migration, yet still performed pretty well over 10 years.
It's a really good point to make, Arjun. One thing that I do love about the research you've got here too is you even bring in industry as another variable, basically, as to how, sometimes population growth can be a good thing. Sometimes it doesn't have that effect. And it does make so much sense when you're looking at regions that have, as you said, the balanced infrastructure. The resilience can be there much more than it would be, say, if you're looking across in WA and looking into mining areas.
Yeah, definitely. I guess the WA is a perfect example. When we looked at industry, East Pilbara was a certain location where the economy was very much dominated by mining. And mining accounts for 96% of the region's output and 79% of jobs when looking at the deep data. And that was, considering ABS, trading economics, and so forth. When mineral prices obviously dropped substantially in the mid-2000s, it experienced a massive increase in resident outflow or migration going out. And its median house price followed very quickly and declined steeply during those years. So this is an example where when you tie in economy and people movement, then that's usually either a sign of success or danger. When it's people movement in isolation, but the economy is helpful in that economy is well placed in that Armadale example, then you can clearly see it didn't have the same retraction of prices like East Pilbara did. So it's a great point you raise. And this is now starting to basically going, I now attached one point of data with the next point of data, and suddenly your picture gets clearer. And this is a big part of what we do when it comes to helping clients is how can we make your picture as clear as possible when you consider investing so that you can connect the dots? And that's what simplified and effective property investing is all about, is multiple layers of data, connecting the dots. And if you can't say it to your mates over a sentence, it probably doesn't make sense or it's not going to work.
One thing that does really stick out here then is just simply how easy it is to be making a mistake. I'm sure you've probably seen a fair few of these mistakes, but made by people that probably then come to you later on and go, I don't know what I did wrong, or, I thought I'd worked it out. What are some of the red flags that people need to be looking at if they are, taking into account this migration data?
Yeah, so this is a good point. So if we break it down into 3 core points, number 1 is overseas migration does not immediately have positive effects on the house price of a market. That's the first thing we analyzed. And that's because many overseas migrants actually come in and become renters to begin with. The second thing is that isolated population growth or decline is not going to equal a market's success story or downfall. And so we saw that as evidenced by the cities that did not have good internal migration, and they still performed well. The Sydney versus Brisbane, the Armidale versus Bundaberg. But the third and final point is that when looking at population data, if you move it hand in hand with economic data, and that to a diversified economy and city, you can actually start to have some really positive signs for a market and where it may be going. For example, if we start to look at a chain of events where projects get announced, there is then a large amount of job advertisements, followed by a reduction in vacancy as people come to rent and work in these areas, followed by it being a diversified economy, and then combining it with a healthy amount of migration, that all of a sudden is a perfect recipe. It's a story that's coming together. Obviously, even in stories where the economy is strong and the migration is not as strong because the houses just aren't there for people to move into, that can still be a healthy scenario, but it's just this lovely picture when all of it comes together. And that's what people should do when listening to the show or when listening to, anything that we cover off here. It's really to go and say multiple dots coming together with population as a factor in the soul is going to create a result that, you feel happy about, because an economy that's healthy, people that want to be there and coming there, combine it with little to no housing for sale and combine it with affordability, that's usually a property investment market that's got healthy fundamentals.
I'm so curious, and this is a little bit sideways, Arjun, but you brought up, creating that picture. And I'm sure you're probably, I don't even know if spreadsheets would be, too simple for you to be using, but with the amount of data that you're pulling in, what is the picture of, a great investment option for you? Obviously, without giving away any of those secrets, but, is there something that does, just really quickly show you some green flags as to whether a place is worth pursuing?
Yeah, definitely. So when people do get in touch with us for a free consultation, and they can do that via InvestorKit.com.au, we actually, in a free consultation, will firstly take you through multiple conversations to understand if we can help. But if we can genuinely help and you are really seeking support of a buyer's agent to take your portfolio to a new height or start it, one of the core things we do in that session is to make sure that you get a lot of value back. And in that value, we share the screen and run through 3 core parts that we often find can make a big difference to an investor's portfolio. Firstly is, how do you plan that portfolio to be able to make sure that you're going in the right direction? Second is, we go through our example research reports, as well as the things to look out for from identifying what phase a market is for its cycle. And that includes going through economic pressure, future supply risk, housing availability, price pressure, and rental pressure. These are some of the core fundamentals of what drives markets. And lastly, we even take you through a due diligence checklist around what things to avoid. How can you make sure that you aren't stuck by being in a flood zone, a bushfire zone, buying a house on a main road, having a bus stop or a school right in front of your house, or having extremely odd-shaped blocks that show high days on market when looking at previous sales? What about the train tracks? Are they too close to the house? So the key thing here is that there's lots of data that we can go through, and that too free at no cost, where people can have a chat to us and run through this as part of understanding if a buyer's agent is the right fit for them. And if they do feel it's the right fit, and so do we start to go through these as part of that session. And that includes portfolio planning, research, market cycle identification, and of course, due diligence, just to make sure you can really set yourself up.
So basically what I got from all that is that, again, it depends. Those green flags depend on what someone is looking for, really. And I mean, we've said it on this show before plenty of times, it is an individual investor's journey. So that makes perfect sense, Arjun. That it was probably a stupid question for me in hindsight, but, it's one of those things that people do need to know, and they don't know what they don't know either, really.
Yeah, totally. I think it reminds me of some of the portfolio planning sessions we ran recently, where one person just needed one more 550K property and they were okay to hit their goal. So having every single market indicators and pressure points and where it is and what stands out is not likely going to make a huge difference to this person if they have a 20-year holding journey and they just need one property under 550. I think more now it's about what their portfolio has, doesn't has, and how we then take them there. For others, it means, no, it's their first property and they need the best possible short-term growth to get ahead. So it is going to be a big factor of it depends. And that's where just, jumping on investorkit.com.au and reaching out for a free consultation can be the starting point for us to understand how we can help.
For sure. Before I let you go, Arjun, it would be amiss of me not to ask, really, because we've name dropped a fair few locations lately. In this conversation. And are there any really big winners or losers that could be out there that you think, are at least worth people keeping an eye on, with migration kind of, front and center for that?
Yeah, I think the two core areas that seem to be chugging along pretty well are most parts of regional South Australia and most parts of regional Queensland. And I think if we're looking through dot pointing why these areas are standing out, firstly, let's take a step back and look at the results for 2022, the year of the declines, the year of the nation going backwards, the year of interest rates impacting many, borrowing capacities down by 30%. And yes, there was these green shoots that came out and said, hold on a minute, we're here to produce results between 8 up to 20% plus, depending on which area. So looking at it, the most common things we found in the highest performing markets across Australia for 2022 were A, affordability. Now, affordability, I don't mean someone having a $3 million budget and suddenly going, 1 mil looks cheap. I'm talking about affordability in the fact of local incomes, local mortgages, local prices. And why that's important to look at is relative, because then we can not assume that, hey, I'm a Sydney side or a Melbourne is sitting here, Brisbane looks cheap. Well, it's about how do you look at it from what the locals see. That was the first part. The second part is that they were extremely undersupplied. And just to give you a context of undersupply, I'm talking between 30 and 60% listings for sale below what they were just before COVID hit us. So imagine all this housing supply just vanished and hasn't come back yet. The third thing we found was an acutely undersupplied rental market. Vacancy rates all over the country now start with a 0, and these locations were no different. Lastly, we noticed a big improvement in the local job markets, unemployment, and as a result, job advertisements too. And so whether the cities had 10, 20, 30,000 people, like the likes of Murray Bridge in South Australia or Mount Gambier in regional South Australia, or whether you go fly across to Queensland and they were the far north Queensland locations with, whatever you want to call it, higher insurances or higher bills, yet they were positive growing markets from Toowoomba, Rockhampton, Townsville, Cairns. So I guess the most common factors were some of those things that I mentioned, which were healthy economy, undersupplied markets, affordable, and from that perspective, also a tight rental condition. And this is what's making the difference for 2022. And if interest rates keep staying stubborn, it's those combination of factors that will likely look good for 2023. But when those interest rates do start to come down, either later this year or at some point 2024, then as a result, I think we might look into what's known as the recovery markets. So the recovery markets aren't necessarily markets that may grow the best for the next 5 years, but they may have the fastest recovery, like a slingshot, over the next 1 year. And it's really important for investors to realize that recovery does not always equal growth. Recovery may mean something that comes back to its peak. You might make the short-term gap of 10% that fell off the cliff before, but does it just flatline after that? Because we all remember Sydney from 2017 to 2019. Sydney had some substantial declines. everyone was biting and anxious and keen for that recovery. And those who bought in 2019 sure did well, but that recovery lasted till about 2021. And then again, it's fallen off in 22. And so you don't want to get this confusion that you're seeing this amazing growth when all you're doing is buying in zigzags. Really, what's going to mean positive strides for your portfolio is buying in markets that are likely to perform not just for the next year, but the next 5 years.
Well, there you go. My head is absolutely spinning with the amount of information that just came off your tongue. Arjun, thank you so much for sharing that with us today. I feel like everyone who didn't write anything down then needs to go back and rewind this episode and listen again and take notes throughout, because some amazing information there. There's also information available on investorkit.com.au. Arjun, and they can just go on there if they do want to reach out and chat to anyone further about this, can't they?
Yeah, we've got a plethora of research reports, white papers for free, podcasts to check out and download. And as you know, our co-hosted Property Nerds podcast, which we work closely with yourself on, and with regards to reaching out to have a chat to make sure that you learn about where we can help with research, making the best decisions you possibly can, and help you take your portfolio to new heights. InvestorKit.com.au.
As always, it's been an absolute pleasure to chat with you today, Arjun. Thank you so much for your time.
Thank you so much. See you later.
To everyone who is listening along, we hope you have enjoyed this episode. If you have any questions, don't hesitate to reach out, editor@smartpropertyinvestment.com.au. That is all we have time for today. Until next time, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.